Hello everyone, PS from PS Invest Plays here today. After Q2 2021 earnings report, UiPath has shared more than 50%. Many analysts think that it is still overvalued. Is this true? Or can we expect higher stock price in 2021 and beyond? In this video, we will understand its business, its financials, its future growth outlook, and review its chart using Elliott Wave to see how we can make money. So, stick around. I think you'll like what I have in store for you today. UiPath, ticker PATH or PATH. UiPath is an American global software company for robotic process automation founded in Romania by Daniel Dines and Marius Tîrcă and headquartered in New York City. It creates software to serve the robotic process automation market, or RPA for short. The company's software helps businesses to decide which office tasks can be automated using custom software. UiPath has the potential to disrupt office life as we know it and fatten profit margins for many major companies around the world. The company's software utilizes AI and machine learning to come to the best financial outcomes for each customer. Customers pay a high price for UiPath's platform because of the marginal cost benefit their software brings the customer with every headcount reduction. The next part of UiPath's job is to actually automate the task. This in turn brings in great annualized renewal rate, or ARR, for UiPath, as the customer needs to keep UiPath on its payroll to actually carry out the job they replaced. The business model is genius for a couple of reasons. Firstly, by finding the company's weak links and replacing them, UiPath is creating a moat around their software. If a company wants to move on from UiPath, it will need to rehire the people they fired, which will likely cost more than UiPath in the first place. With a large customer base and many customers paying $100K plus every year, UiPath has a space in the future work. The company's future success depends on partners and vendors. UiPath's business model survives of deep technological relationships with the most important ERPs. Currently, the company has done a great job at partnering with the most important SaaS firms for many different companies in a variety of industries. UiPath has the ability to serve many different types of clients, big and small, because of how universally many SaaS programs are in business. Today, UiPath works with over 4,700 partners, including system integrators like Accenture and Deloitte. These companies effectively extend UiPath's sales force, helping it to grow its market presence. The UiPath marketplace also features hundreds of pre-built integrations, enabling clients to quickly automate tasks in Microsoft 365, Atlassian, and other popular applications. To that end, UiPath's easy-to-use software and broad partner ecosystem gives it an edge. In fact, companies like Forrester Research and Gartner have recognized UiPath as the leader in RPA, citing a stronger product offering than any other rival. That advantage has supercharged its top-line growth. For a SaaS company, UiPath performs very well financially. This is due to the company's increasing ARR and high-margin products. Software inherently is a high-margin business, and UiPath is no exception. Scaling this technology is relatively easy, as word of mouth spreads fast and software is easy to install. As seen in the Q2 2021 earnings report, UiPath continued its strong growth rates, with annual recurring revenues or ARR growing 60% year over year. Its CAGR is expected to grow at astounding 76%. While new customers drove some of that growth, most of the growth was driven by the dollar-based net retention rate of 144%. There is dramatic growth in lifetime value of Path's customers. This makes sense because the more customers use UiPath, the more motivated they are to use it more and more. Wall Street has taken favor with companies that can sustain a high level of dollar-based net retention. In Q2 2021, Path or UiPath made surprising improvements in profitability, albeit on a non-GAAP basis, which does not account for equity-based compensation. Additionally, note that Path ended the quarter with $1.9 billion in cash, more than enough to give it a fortress balance sheet even with losses for several years. Also, UiPath guided for the next quarter to have $797 million in ARR, representing growth of 54% year over year. That would represent 9.8% sequential growth, a mild deceleration from the 11.1% reported this quarter. UiPath is expecting ARR to end up around $878 million for the full year. Assuming UiPath meets third quarter guidance, then full year guidance implies 10.2% sequential growth, a reacceleration of growth. Given how tech peers have used guidance, it is reasonable to assume that UiPath will outperform each of these numbers at least slightly, especially considering that they are already accounting for some deceleration in sequential growth. Looking at the financials for UiPath, revenue, gross profit, EBITDA, net income, EPS or earnings per share are increasing quarter over quarter and year over year. After Q2 2021 earnings report, UiPath dipped sharply, even though the earnings were quite strong in my opinion. Oftentimes, stock prices don't move relative to the fundamentals. UiPath reported strong earnings results that slightly beat expectations, while also guiding for full year revenues that were slightly higher than estimates. The stock dropped anyway, perhaps reflecting the rich valuation already built into the stock. If we look the quarter earnings report, revenue grew 40% to $196 million and annual recurring revenue was up 60% to $727 million. Losses were nearly $100 million, but this is because the company is ramping up to capitalize on what it sees as a $30 billion opportunity by 2024. This means the company has realized less than 3% of its total opportunity. As the market leader, it wants to spend now to develop new products and obtain new customers to take advantage of the growth of its industry. UiPath doubled spending on research and development in its latest quarter compared to a year ago, aiming to remain the leader in its field and capitalize on it over the next 5 years. Being a high-growth company is not without risk. It has $1.9 billion in cash to subsidize its losses. I think investors who have a long-term investment horizon should take the opportunity to buy the dips. This is also indicative in the charts where I see the stock price to experience further pullback before it increases considerably in the next 5 to 6 years. Now, let's take a look at the charts for UiPath. Sorry for the interruption, but I wanted to take a moment to remind you that if you like this video, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. With that said, let's get back to our analysis. Looking at the chart for UiPath, Currently, wave C, which is the corrective wave, is in progress. I expect the stock price to come down even further, where I see strong resistance around $39.31 and strong support around $36.73. After this corrective wave is completed, I expect a bull run to resume. The first leg up, which is wave 1, is typically 50% or 61.8% retracement of wave C, which gives us a price range of $64.83 to $70.88. After this wave 1 is completed, I expect a slight retracement and wave 2 to resume. Wave 2 is typically 61.8% retracement of wave 1, giving us short-term decline of price to $53.62. After this retracement is completed, I expect wave 3 to resume, and wave 3 is typically 200% of waves 1 to 2, giving us a short-term price target of $116.09. After this wave is completed, I expect wave 4 to resume, and wave 4 is typically 23.6% retracement of wave 3, giving us a short-term price target of $101.29. After this retracement is completed, I expect wave 5 to resume, which is typically 61.8% of waves 1 to 3, giving us a final price target of $148.63, which translates into a profit of 280% in the next 5 to 6 years. Now, let's summarize. At its current stock price, I would recommend you to nibble any pullbacks and accumulate further corrections. For me, the accumulation range is any price between $36.73 and $39.31. I would recommend holding UiPath stock for the next 5 to 6 years, as I expect a price target of $148.63, which translates into a profit of 280% in the next 5 to 6 years. What do you think of this analysis? Please leave me a comment and let me know. As always, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. Until then, bye-bye.